Michael Burry recently tweeted a warning that the stock market has been acting irrationally again, as strange stock market events have been happening the past few weeks. Michael Burry's tweet noted that prior bear markets have ended only after the speculation and silliness that fueled the previous bubbles has left the stock market. However, he compares this current time period to 2001, during the dot-com bubble, when the stock market was still behaving irrationally. During this time, it was additional events like Enron's fraud and bankruptcy that further pushed the markets into turmoil and began to mark the end of the speculative activity and irrationality of the early 2000s dot-com bubble. In a follow-up tweet, Michael Burry pointed to a recent case with Magic Empire Global stock, which had soared up 6,149% after its IPO, as speculative trading drove the stock up in a parabolic fashion. Michael Burry attributed the volatile movement to desperation from stock traders, saying that, quote, "Gamblers gamble more the more they lose," end quote. Magic Empire is a Hong Kong-based financial services company with less than $17 million in revenue, and the company had over a $5 billion market cap at one point, as speculative traders bought the stock and drove the price up. The stock then crashed 89% the following couple days, as traders all started to sell the stock after its price stopped climbing. Michael Burry sees this as a clear example of the kind of silliness that's been present in the stock market since 2020, as relaxed monetary policy and low interest rates fueled a massive increase in stock market prices and market activity. This isn't even the most egregious example of the irrational market behavior Michael Burry is pointing to. A financial technology company in Hong Kong called AMTD Digital soared over 30,000% in just 3 weeks since their IPO. This made the company briefly bigger than Goldman Sachs, even though AMTD Digital had $25 million in revenue in a year, and Goldman Sachs had nearly $60 billion in revenue last year. AMTD Digital stock price has since declined over 85%, following the speculation-fueled volatility. These ridiculous moves have been concentrated in stocks that have poor liquidity, low volume, and low market cap, which makes their price much more volatile and easier to manipulate during speculative-driven volatility events. But Michael Burry is pointing to the fact that these events show that there is still lots of speculative excess that exists in the stock market. Meme stocks have also been making a comeback as well in recent weeks, as Bed Bath & Beyond has risen over 200% the last month, and AMC has risen over 45% during the same time period, despite the fact that both businesses are struggling and have weak fundamentals. The fact that speculation like this is still taking place in the markets suggests that stock market pessimism isn't as strong as people think. There are still plenty of speculators and bulls who are pushing prices higher despite the weakening fundamentals in the economy and stricter monetary policy from the Fed. Since there are still many bulls and speculators holding on to stocks that haven't sold yet, Michael Burry and the general theory surrounding market psychology would say that there is still plenty of optimism in the market, which means that there is more room for the stock market to fall as more people lose their optimism and begin to panic and sell. In the theory of stock market psychology and market cycles, stock market cycles start with disbelief, as people don't believe a rally in stock prices will last. But as the stock market continues to climb the wall of worry and stock prices increase, people start to become more optimistic until the market reaches a euphoria point where bullish sentiment is at its peak and there are tons of buyers in the market that are pushing stock prices to new highs. Then the market starts to become complacent as stocks begin to decline, with some people selling and taking profits as there are no more buyers left to enter. As the excessive bullish sentiment begins to leave, the market becomes more anxious before leading to panic and a capitulation point where bearish sentiment and negativity begins to peak. Eventually, the market cycle begins to reset as a new stock market cycle begins with disbelief in a stock price rally. This is why Michael Burry is warning that the recent stock market speculation and irrationality could be a bad sign for the stock market and means that it could potentially fall further. Market sentiment seems like it has not deteriorated to the point of a bottom in the stock market, since speculators are still fueling stock price moves to extreme valuations that make no sense, like what just happened with Magic Empire Global and AMTD Digital stocks. For these reasons, Michael Burry is warning that the stock market is not healthy yet, and it has not yet normalized. What do you think about Michael Burry's warning and the recent major moves in stocks like Magic Empire Global and AMTD Digital? Do you think the stock market will start to fall again, or do you think that this stock market rally will continue? Let me know your thoughts in the comments below, and be sure to leave a like on the video and subscribe to the channel for more finance and investing content. Thanks.